Hey everyone, Meet Kevin here. Welcome back to another episode of the Meet Kevin Show. Today, we have the host of the David Pakman Show, and I want to bring this up front. We had Lauren Southern on a few weeks ago, and a lot of folks were wondering, hey, we want to get somebody with the opposite perspective. And I thought, hey, I think that might be David, who's got a channel on YouTube. He's the host of the David Pakman Show. He's got some really great insights. And so, David, welcome aboard. Introduce yourself.
Thank you. It's so great to be here. I appreciate it.
Thank you so much. So I want to get started. I want to jump right into this. We got 45 minutes to drill you on your thoughts here on politics, stimulus, infrastructure. Why don't we start with stimulus? What have you seen out there with a stimulus? Do you think this is actually helping? Is this stimulating our economy? You know, should Trump have done more? Is Biden doing enough? Tell me a little bit. Where's your head?
I mean, listen, my approach to this is from my background in economics. The politics, I mean, I make no secret about the fact that I'm on the left, but this is pretty much basic macroeconomics. We had a demand collapse when the pandemic happened. People stopped demanding at a macroeconomic level a bunch of different goods and services that were previously steadily demanded. And the way you, in the short to medium term, deal with a collapse in demand is you stimulate demand by giving people money to spend. And there are all sorts of considerations about the long term, and people want to, and we can talk about things like inflation spirals and all of these different things. But in the sort of medium term, this made sense, and it worked to some degree. We still had unemployment increase. I think the way to avoid that would have been to pay businesses to keep people on payrolls, even if their businesses weren't fully functioning. That's not the way they chose to do it. And so, two of these packages were done by Trump. One was done by Biden. They were similar in many ways. I don't have a dramatically different political analysis for two versus the third. I think they all could have been done and should have been done more quickly, though.
Gotcha. So the roadblocks like that we saw with the HEROES Act, for example, back was that last May that was passed by Democrats. Do you think something like that large package should have been passed a lot sooner then? So you're kind of a proponent of the Keynesian kind of school of thought where let's spend when the market's down?
It's not about Keynesian. It's if we were going to spend it, we could have done much more good for the American people by not delaying for political reasons. And this applies to Joe Biden as well. Joe Biden said we're going to do it right away, and it's going to be $2,000, and it was $1,400 more, and it took several months, and it got done. That's what matters, and that's great. But I think all of these things could have been done more quickly.
Is that just a symptom of our Congress, though? I mean, does that sometimes... I've had this theory before that because our Congress is so dysfunctional, things take so long in definition of dysfunctional. Everything just takes way longer than expected. Is it possible that actually, in a weird way, keeps inflation lower because people expect, government spending more money? Yeah, okay, that's going to take forever to get through. Good luck. Is that possibly something that actually keeps inflation down? Or are we going to spiral out?
I'm not sure I understand. You're saying... the stimulus being delayed lowered inflation?
Yeah, so in a weird, and this is a weird theory I have. The theory I have is the more dysfunctional our Congress is and the longer things take to get, the lower people's expectations for inflation are, which could mean lower inflation in the future, because we think even though the government has spent a lot and they might spend a lot more, they're so slow at doing it. Imagine this for a moment, just to go to the extreme. Imagine they could come up with a stimulus bill on a napkin and pass it in 24 hours. And then they're like, all right, let's do 1.9 today. Okay, a month goes by. Let's do another 1.9. I feel like all of a sudden people's trust in the currency would evaporate and we'd see inflation, hyperinflation right away. We kind of have this opposite extreme where it's a disaster to get things passed.
Yeah, no, I don't. So there's a lot of ifs, ands, and buts there. But I think
Sure.
The most important thing to understand is the fear mongering around hyperinflation when the government does stuff has been with us for decades. But inflation has remained very low. We were told that there was going to be hyperinflation when Barack Obama in 2009 did TARP, and we didn't have it. And we were told we were going to get super inflation when Trump did the first stimulus, and it never happened. And when he did the second stimulus, and it never happened. And what we're now, as we become more sophisticated in our economic understanding, we understand things like modern monetary theory. And we realize that if the government were to, the term printing money is not even relevant because it's really computers at this point. But if the government were to put money digitally in the bank's accounts to pay down foreign debt, that could have an inflationary effect. That's not what's been done. The money has been doled out to stimulate demand, and it goes into small business, it goes into production, it's GDP positive. And when you do that, you don't get that inflation that some people fearmonger about. And we don't need to speculate, just look at inflation over the last 30 years.
Yeah. Now, what do you say to people who say, "Hey, David, true, inflation's been trending down over the last 30 years, but I mean, look at commodity prices now. Look at copper. Look at lumber. You know, we've got prices of everything's going up except for maybe apparel. Used cars are getting more expensive. Isn't this a sign that that's it? Hyperinflation is officially here?"
Absolutely not. So let's break down each. So you gish galloped me there. I don't know if you know that. Are you familiar with that term?
I think I have a feeling, but I'll let you explain.
You threw a bunch of stuff at me that seem like related examples, but they're really not. So let's kind of give me. It was used cars, commodity prices.
I appreciate you doing that because people gish gallop all the time. So I appreciate that. So let's start with lumber. Is that just a symptom of real estate prices going up and low rates?
So lumber, there's a couple things. In general, with commodities over long periods, commodity prices go down because technology allows us to more efficiently manage, harvest, create, whatever. Okay, so over the long term, short-term commodity price increases tend to be blips, and they tend to be based on sort of a narrow supply and demand. People wanting to move to suburbs during coronavirus, get more space for work from home, certainly has driven real estate sectors up. You need lumber to build that. So that would be lumber. But over the long term, commodity prices still trend down. Used cars is an interesting one because demand for new cars versus used cars are sort of different markets. And the reason why we're seeing more demand for used cars in part is because of economic circumstances where people are less able to afford new cars. So you have to understand sort of the context there. And then apparel, we know why apparel has been getting cheaper and cheaper. For 20 years or longer, the US has decided, and by decided, I mean implicitly, that we prefer to pay less for things like clothes by getting them manufactured in countries with cheaper labor, and not to pay higher wages here in the United States to the people that would be making those clothes. So they're all different markets and different explanations.
Which is one of the reasons I feel like Nike is getting blasted now, though, for using cheaper labor, although that's kind of what people want is a cheaper product, huh?
Yeah, I mean, listen, when we talk about let's manufacture American and let's buy American and let's bring everything back. We could do that. It took decades to get our supply chains to what they are now, so it would take a long time, but it would come with higher prices. It's not necessarily bad. We would pay more for Nike shoes, and workers in the US making shoes would make more money. It would be a decision. And what our elected officials decided over the last 30 years is we'd rather the cheaper stuff and we'd rather offshore the jobs.
Right. Now, do you think that well, I want to touch on the cars thing really quick. Is that sort of like the example of Griffin goods where you kind of get these as sort of incomes? Well, I guess I'm trying to think of what that would be an example of. I can't think of the economic term right now, but it's basically people are substituting is what you're saying. People are substituting the used cars for the newer cars. But don't you think that stimulus is changing that? I mean, now people are getting their stimulus checks and there are not enough, for example, Ford pickup trucks on the lots anymore. And so we're seeing the price of new cars also going up.
Yeah, I'm unsure about people making car buying decisions with $1,400. It doesn't sound intuitive to me that that's what would be happening.
I think the argument is a family of four might be getting that $5,600, so maybe that might be enough for a down payment.
Yeah, it's conceivable. I think that if you're depending on stimulus to get a car, you probably shouldn't be looking at a new car, but that's more of a personal finance perspective than an economic one.
Good point. Okay, so you're thinking a lot of these prices that are going up are short-term supply chain, maybe inefficiencies or blips or problems, which is not going to translate into inflation. A lot of folks believe that the CPI data is rigged, that basically anytime there's a hint that inflation is going up, they change the formula or whatever. What's your take on this? How do you respond to folks saying you can't trust the CPI and just look around, prices are going up?
Yeah, there's no question that there's an arbitrary nature to CPI. What is the basket of goods that you include in CPI? And there's no doubt that bad faith actors could manipulate what's included and what's excluded in order to generate a particular result. But there's lots of other independent measures. You can Google alternative to CPI for measuring inflation, and none of them point to significant inflation.
Nice. So, I mean, not seeing hyperinflation is a good thing, because I think if we saw hyperinflation, it would be pretty bad for a lot of us in society. What's your long-term view? Do you believe that the Federal Reserve is going to raise rates sooner? A lot of folks on Wall Street right now say, "Look, we got to price in higher inflation. It's coming. The Fed's going to be wrong. They won't have the luxury of waiting until 23, 24. They're going to have to move in 22."
I don't see much good in predicting what the Fed will do, much the same way that, I think that most economic predictions are basically guesses, and humans are notoriously bad at making financial predictions.
Sure.
So I have no idea. I believe the Fed when it says its belief and its intention is that they're going to keep rates low for the foreseeable future. I think if circumstances change, they would probably revisit that. But beyond that, there's no particular prediction I would make.
Gotcha. Do you think that the stimulus has created distortions, keeping companies alive that shouldn't be alive? Should we have just let a bunch of companies go bankrupt and go under, because maybe now certain companies that are here today shouldn't be around and they're just absorbing capital from other folks?
Sure. So I think the question of stimulus for business has to be divided into big business and then local and small businesses. Local and small businesses, very often by nature, are very low profit margin businesses. And I know, for example, restaurant owners who basically lose money 8 months of the year, a little bit, right? But then 4 months of the year, they make the bulk of their profit. And so if those 4 months aren't good, they're no longer a viable business. So that's an example where these are the small businesses, bars, cafes, local bookstores that are really kind of like the fabric of neighborhoods. And I don't think we are sort of bailing out bad businesses when we give them a bridge during the pandemic. I think the bigger question is about big business and whether they should be subsidized to the tune of sometimes billions of dollars. And the answer is it depends on the industry and it depends on the business. Take something like airlines. I can see both sides on airlines. On the one hand, these are already heavily subsidized businesses. Why are we giving them even more money at this point in time? On the other hand, airlines are infrastructure and airports are how people come and do business with the United States. So you can make the case that for the long-term good of the economy, you need to help those businesses out. I think there's a debate to be had there.
Gotcha. Yeah, that's something where you get a lot of, I hear Kevin O'Leary made this argument that screw the airlines, let the airlines go bankrupt, bail out the workers directly and not the airlines. Is that similar to what you're describing?
Well, no, in the sense that if you let the airline fail and then you give the workers money until they find another job, great. That's essentially unemployment insurance, and that's fine. Right. The question is, when travel resumes, if it's more of a pain to fly to the US because American has gone out of business, for example, you're going to incentivize others to do business elsewhere rather than here. So really, it's fundamentally an infrastructure question, and airlines are part of infrastructure the way the grid is, the way internet increasingly is. So I'm not exactly on board with the way Kevin O'Leary would describe it.
Well, how do you feel about the expanding of, let's say, broadband to rural areas and the big spending that Biden is proposing in his infrastructure plan? Is this really going to stimulate our economy, or is this really just fixing stuff that should have been fixed? And should the package be a lot smaller?
Well, both of the things you mentioned are good. Spending that stimulates the economy is good. Fixing things that should be fixed is good. The fact that they should have been fixed before isn't a good reason not to fix them now. So it's a bunch of different things. I think that one of the interesting things in watching some on the right oppose this bill have been that this type of infrastructure spending, number one, most of the work is done by private industry. So there's a lot of people who say, I don't want the government doing so much stuff. Well, it's really going to be private businesses getting hired by the government to do it. And private business is something the right claims to support and favor. The other interesting thing is that from the standpoint of a business, infrastructure spending is cost externalization. And what I mean by that is if you're a store, you depend on the roads being passable. You depend on streetlights working. You depend on infrastructure like electrical and plumbing and all these things to work.
Right.
You're able to have customers easily be able to come and give you money thanks to the infrastructure spending of the government. So you would think that the right would love it. It's a way for businesses to reap profits thanks to someone else's infrastructure spending.
Wow. Yeah, it completely makes sense. Now, the right argument, the Republican argument right now seems to be, well, let's do a $600 to $700 billion package. Let's do that. Let's do the infrastructure. But Republicans are obviously heavily opposed to green and climate initiatives, energy efficiency standards. You know, Donald Trump, one of the big things he did was remove energy efficiency requirements, or at least some of them, for vehicles. To say, hey, well, if we lower prices, people can afford a new car, and that'll increase average fuel efficiency. What's your stand on that?
Well, listen, for whatever reason, Republicans seem extremely intimidated by large packages. They have a tendency for small, sometimes very weak packages with terrible performance, if you understand what I'm saying, reading between the lines here, right?
Yeah.
So I think that the games around fine-tuning package size are less interesting to me than fundamentally what one's philosophical approach to the role of government should be. Because really, it's not that if the package is a little tinier or it's a little flimsier, Republicans all of a sudden love it. It's they don't believe fundamentally that the government should be even involved in this, many of them, because they are such extreme small government conservatives. So it's not even, package size. They try to flaunt tiny packages. I don't know what they're bragging about, quite frankly, but I don't even think they're talking in good faith, quite frankly.
Gotcha. Got it. So it's really more of just a contrasting argument. Like there's not a small package to be had that would function as well as this. It's just, we don't want, two. How about 600?
That's exactly right. The small package is not going to work that well. I think you understand what I'm saying.
Nobody likes small packages, right? We got to have big packages in America. So, this is going to be huge, though, because we're thinking about up to $4 trillion, 2.2, and then the next phase, the social infrastructure package of 1.9. What's your stance on that? Is this a step towards universal basic income, for example, with the child tax credit, to say, hey, let's give people $250 to $300 a month to have child poverty? But now is this a step towards universal basic income?
It may be, the reason that I think it's not is that there's right now Democrats control everything, White House, House and Senate.
Yeah.
Even many Democrats in the Senate don't support universal basic income. So I know that there are some on the right who think that the child tax credit is some kind of stealth way to get universal basic income. I mean, that sounds interesting. I think universal basic income is interesting. I also think a negative income tax rate at certain income levels would be an alternative. I don't think it's the precursor to UBI.
Gotcha. What's your thought on the linkage between poverty and crime? We hear stats that maybe if you're in poverty, you're 2.5 times more likely to be a victim of violent crime. Is there a link between being poor and a direct increase in crime?
So I want to make sure I understand the question. You said that being poor makes you more likely to be the victim of crime. You're not talking about a perpetrator.
Yes.
I think that's undeniably true. I mean, crime is higher in poor neighborhoods. So I think that's absolutely both intuitive and borne out by the facts. Yeah.
Yeah. And so if the child tax credit or a form of universal basic income could eliminate poverty, should the country have universal basic income to eliminate poverty and maybe take people out of those situations?
Yeah, I started interviewing Andrew Yang years ago, and he was one of the earlier, more notable people talking about UBI, and many other folks. I generally tend to like UBI as an idea. Now, the devil is in the details. Some folks want to do UBI to replace all welfare programs,
right,
and just give everybody UBI. You reduce bureaucratic and administrative costs.
Sure.
It's demand side stimulus. Great, you're kind of done with it. Others have the idea of every UBI dollar comes out of some other program. You also have to look at how the federal poverty line is set. There's a lot to this, but generally speaking, the UBI pilot programs have gone really well in terms of reducing stress and anxiety around having food for your family, and they've been economically stimulative. So I think it's a great idea to pursue.
Now, I want to ask you the reverse of what you picked up on, and that is, do you think that being in poverty could lead to crime? That is, lead somebody to commit crime because maybe they have no alternative?
Yeah, I think, again, intuitively, it makes sense that if you are in a desperate situation where you need to figure out a way to feed yourself, to feed your family, etc., you are going to be more likely to be willing to do things that somebody who is not in a desperate situation is going to be willing to do. So it makes absolute intuitive sense.
What do you think about the housing crisis and affordability crisis that we're seeing? Is this a symptom of the quote unquote money printing, because we know it's not actual printing like you had said, that's going on, these artificially low rates, or are they artificially low? Should we be at 0% forever? And is this a problem for people to be able to build their wealth, not being able to get into real estate?
Yeah, so there's a couple different things going on. One is the issue of rates. Rates tend to move inverse to prices, as of course you know. And then there's also the issue of cost of living relative to wages, because in principle, it wouldn't be bad for housing prices to continue to go up if wages are keeping track with that. But the problem is that they've become sort of disaggregated. You end up with people having to live further and further from their job in order to be able to afford a home. So much like with the cost of college, I think that affordability is a major problem. During the pandemic, interestingly enough, in many cities, and you may know more about this than I do, in many cities, the sort of mid-tier to luxury market has done really well, whereas lower markets have not done quite so well when it comes to real estate prices. And so I think that to have the conversation more precisely, it's good to kind of segment into different markets. But there's no question that you look at some cities and you look at the state's minimum wage and the median wage and the cost to live in a city, it's completely out of whack. And it's similar to college in this sense. You look at the cost of a degree relative to what you would expect to earn with that degree, and it's gotten increasingly out of whack in the same way.
In that case, is there an argument to say that maybe college isn't for everyone? Maybe housing isn't for everyone. Maybe the American dream isn't college degree and housing. Maybe it's different. Is there an argument to be had that, hey, just let housing prices go up and just let the rich buy it?
Yeah, I don't think that. So I think the college one is more interesting to me. Let's go back to that one. With housing, I mean, what's the if you don't have housing, you're homeless, right? So I mean, right. I don't.
So you're renting.
Yeah, well, but the cost of rent will be based on what the landlord paid to buy the house. So we're really talking about all the same thing in a sense. So that one, I don't know that we can say, let's not worry about it. I do think that increasingly you're going to see, for example, people around my age, when my hypothetical kids are going to college, I think you're going to see two things if college prices aren't gotten under control, and maybe they will be, 20 years from now. One is you're going to see more and more people skip college altogether and go directly into entrepreneurship. And unfortunately, it sounds like maybe that's good, but the problem is that entrepreneurship is very cronyistic and nepotistic. So the haves are going to say to their kids, Don't spend, $280,000 on a 4-year degree. Come intern with me. I'll introduce you to people, and they're going to do fine, but it's going to further create inequality. I think you also may see more jobs say we're not going to require a college degree. Increasingly, requiring a college degree has been something done to reduce the number of applicants and to create some kind of a triage, in a sense, or some initial screening. But you may increasingly see some employers say we're not going to require a college degree. We're going to go about this a different way.
How do you think government should intervene here? Do you think it's government's responsibility to intervene with either housing or college, or just let people decide in that case? I mean, and even another thing, and I've thrown a few things at you, but even another thing is, like you mentioned, we know that entrepreneurship has a high failure rate, maybe because of some of the things that you've described.
Right. I don't know the answer to the full scope that government should have. I think that at this point, if we were going back to day one, I think my answer would be different, given where we are today. Number one, with so many predatory student loans out there, I would like to see some student loan forgiveness. Now, some in my audience don't like that. I don't think it should be blanket forgiveness for everybody, regardless of economic circumstances or current job or field or whatever. Right. But I would like to see some level of student loan forgiveness. The problem is that you continue to see an escalation because it's so easy to get student loans that colleges have no incentive to keep prices lower. And then as prices go up, people can just get a loan, and it's become disaggregated, it's unattached from what you would expect to earn. I don't actually know how to break the cycle.
That makes sense. Now, do you believe that, going back to sort of housing and renting here, that Joe Biden's administration yesterday, I believe, announced that the Consumer Financial Protection Bureau was considering letting people in mortgage forbearance apply for a loan modification that would let them extend their loan up to 40 years, as long as and their payment obviously would go down in that case, and that there would be no foreclosure through some point in 2020. Do you believe that at some point, maybe is the government just doing too much for homeowners and artificially reducing the inventory that we should be seeing in the market?
It's theoretically possible that they could do that. Now, I didn't see this proposal so that I understand. It's not extend a mortgage by 40 years, but to 40 years, right? Like, I believe
it says extend up to 40 years. I imagine, I actually have the document here, so I'll pull it up here really quick because then we can look at it together. It's a pretty incredible piece. It hasn't received a lot of coverage yet. So take a peek at it here. A servicer would be allowed to offer, and I know it says allowed to offer, I'll explain in a sec. The loan, the criteria would include the loan modification would extend the term of the loan by no more than 48 months. So in some sense, it kind of implies it could be an additional 480 months, right? And then down here, loan modification must be made available to those experiencing a COVID-19 hardship.
Yeah, I mean, so let's see. With something like a car loan, this trend to longer and longer loans on a depreciating asset seems nuts to me. And what I regularly say is, if you need a 72 or an 84-month loan for this car, this isn't the car for you. That's my approach on personal, because it's a depreciating asset. Right. Homes, in principle, particularly over the long term, are not depreciating assets. Obviously, you have bubbles that pop, and you have areas that may be different. So I have no problem with delaying or canceling foreclosures due to hardship. That seems to make perfect sense. Also, foreclosure isn't great for anybody, in the sense that banks also don't love the idea of foreclosing and then having to sell the property. It's not good for any foreclosed upon. Your ability to continue working and earning income and all these things is mitigated. So I think that there's value, dollar value, in preventing a foreclosure. By how much you allow loan extension, it's above my pay grade. It would be for someone else to decide. Adding 40 years to a 30-year mortgage seems questionable to me, but I'm only going by, this is the first I've heard of this proposal.
Sure. I'll send it to you. Yeah, we'll talk about it after. So what about, I'm going to ask you this one, a little bit of a pivot here. Is Trump coming back?
I have no idea. I think it'll depend on the fall. I think there's a couple things going on. One, I think by 2024, Trump will be bored, moving on to something else, or maybe in poor health. So I don't know that it's that likely, just knowing Trump. But I think what it'll really depend on is whether Trump can play kingmaker successfully in 2022. There's these members of Congress. Some of them are a little cuckoo for Cocoa Puffs. Madison Taylor Greene and Lauren Boebert, Madison Cawthorn, who don't really have policy. They ran on "We Like Trump," and Trump supported them, and they won. Now, if they get reelected in 2022 with Trump's fundraising, with Trump's help, that gives Trump power. It gives him hand, right? To take a quote from Seinfeld. And he can probably better justify running in 2024. If these Trumpian clowns go down in flames in 2022, it makes it hard for Trump to justify running in 2024. But for the time being, the party is still the party of Trump. Most Republicans support Trump. Most want him to run. And if that continues, he may well give it another shot.
Wow. Do you think he'll win?
No idea. No idea. I mean, just it's sure, maybe. I mean, it's at this we have. It'll depend on what happens in the 6 months prior to the 2024 election, and we just don't know what that's going to be yet.
Now, I like your economics background, and I want to go back to that, but also including the politics here. Why is it every day when I pop over to Fox Business, not Fox Business, when I balance between Bloomberg and CNBC, they're talking about the border wall and the border crisis. What connection to business are they making here?
You'd have to ask them. I don't know. I mean, I think, I guess they would, one of the things they talk about is about brown immigrants stealing jobs from Americans. That's a narrative. So I guess that's sort of a business thing. But, the real business story with undocumented immigration is that the businesses hiring the undocumented immigrants don't get in trouble. I mean, if you want to stop so-called immigration stealing American jobs, punish the businesses doing the hiring, which happens so rarely.
That's interesting. Whether that's the farms or clothing manufacturers in Los Angeles or whatever, why chase essentially down the worker when it's really the businesses that are providing these? But doesn't that go back to the case of sanctuary cities like Los Angeles who enable this?
No, these are sort of these are different things, and I don't fully see the connection. Also, the vast majority of these large employers of huge groups of undocumented immigrants are not in cities anyway.
Where are you finding them?
Agricultural areas, a lot of meatpacking plants, and things that are based in very small cities or rural areas.
That makes sense. Now, what do you think about, there are a lot of folks fleeing, for example, parts of South America or not necessarily directly our immediate border, but other parts of South America because of hyperinflation that's happened in their country. And a lot of them are trying to come to the country with Bitcoin and cryptocurrencies. Where's your sort of mindset on these inflationary dynamics in less stable regimes or countries, and people's fascination with cryptocurrency and inflation?
So a few different things there. One is when we talk about dealing with immigration, arguably the most under-discussed aspect of this is if you really want to deal with immigration at the top level, not like what's the cutoff at which you send someone back versus here or there, right? That's micro. The macro is deal with why people are trying to come here in the first place, which are economic and political circumstances in their countries. So one thing I would really like to see done in a serious way is for an American administration to actually work with the source countries for where undocumented immigrants are coming from and improve the situation there. There's this false notion that some have that everybody wants to come to the United States. Really, very few people want to come to the United States from the vast majority of the world. The people that want to come to the United States, for the most part, other than people who are highly specialized in fields that the elite in that field is here, right? Very high skill folks. For the most part, the primary reason people want to come here when they do is because circumstances in their country are not good. And so dealing with that is one of the best things we can do if we really want to curb undocumented immigration. Now, as far as crypto, I am maybe different from some on the political left in that I like crypto. I've been in Bitcoin for 5 years at this point.
Nice.
don't tell anyone what to do with their money, but to me, 3 to 5% of assets in crypto seems to make sense to me. For me, it's kind of because it's been doing so well, it's grown to be more than that. But then I sell out of it and I kind of get into other assets to maintain around that 3 to 5%. So for me, I'm kind of tired of the lame arguments about used to buy drugs or this type of thing. I think it's a potentially great thing. And as far as immigrants, I don't have too much specifically to add about immigrants in crypto.
Gotcha. Yeah, as Janet Yellen seems to be perpetuating that narrative that cryptocurrencies are used for illicit activities. Is she just a little behind on her research?
Yeah, I mean, so's the U.S. dollar, right? There's a reason. What percentage of U.S. dollars have traces of cocaine on them, or whatever the thing is? Yeah, I don't think that these are bad folks. And you've seen. I mean, listen, look at what J.P. Morgan was saying about Bitcoin 5 years ago versus today, where all and it's not just J.P. Morgan. There's this long list of companies and individuals who were saying this is going to zero, who now say even institutions may want to hold 1 to 2% in Bitcoin. So it's taken some time, but a lot of people are coming around to it.
What are those other assets that you're moving into when you sell your Bitcoin, since you've had it so long and it's run up?
Absolute lowest cost index funds.
Wow. Okay. Any particular, like some of the Vanguards, or what are you picking?
Just the widest possible. I don't want to be, I own some individual stocks, and I've talked about that. I'm not saying anything, breaking any new ground here or saying anything new. This is sort of like the Jack Bogle, Benjamin Graham approach,
Sure.
Which is, I don't think I'm particularly good at picking individual stocks. So I have about 10 or 12 individual stocks that are like 8 to 10% of my portfolio, but
Combined.
time in the market
Yeah.
is the most important thing than timing or picking stocks. And, over time, because I've had a mutual fund account now for 15 years, the dividends that I'm now accumulating just from letting that sit are now significant. They're now actually a significant portion of my annual spend. So that's I don't try to do anything special. My big thing is running my business, not picking stocks. So just low cost index funds.
Do you think they should lower the income tax rate to help encourage people like you to keep running your business?
How it wouldn't help me. It wouldn't encourage me. I mean, think about it this way, and I don't know why more people don't think about this. I'll try this experiment out on you.
Oh no!
If I offered you a 20% return or a 40% return, which would you pick?
Well, of course, the 40%.
Right. And if I offered you a way to avoid a 40% tax or a way to avoid a 20% tax, which tax are you more interested in avoiding?
I want to avoid the 40% tax. That sounds like California.
Right. Now, you know that all business expenses are tax deductible, right?
Yep.
So if taxes are 40%, when you invest in your business, you save 40%. When taxes are 20% and you invest in your business, you save only 20%. A higher tax within reason, right?
Sure.
Is more of an incentive to invest. Now, I'm way oversimplifying this, but
Sure.
People have this very much backwards. The reality is most businesses are going to expand because of demand for the product or service that they're offering. And that has less to do with the tax rate.
That's interesting. Now, some folks argue that, well, hey, look, if I'm in California and 55% of my income's going to the government, they own more of my business than I do. Why am I here? I mean, you can make the same argument, but you're not going to invest 100% of your income either.
No, nobody is regardless. So this is why I think a lot of these arguments are too black and white. It's sort of like on minimum wage when some people say, why $15?
Yeah.
If more money is better, what about 100? What about 1,000? And then you have to say, hey, hold on a second. $1,000 an hour is not a cost of living adjusted minimum wage. It's not an equilibrium wage. There's no justification for $1,000 an hour. And you have to slow down some of that black and white thinking. And, I'm right there with you in that I think particularly the federal government spends my tax money in terrible ways. I don't want so much of my tax money going to defense and the military and a lot of this stuff. But I think a more sort of nuanced understanding of a lot of these taxation issues is a necessity in order to have serious conversations about it.
Gotcha. Now, one of the big frustrations in December, we could say it was initiated by Donald Trump, was that $46 billion is being spent on foreign affairs. And that Donald Trump said, I don't want $600 checks, I want $2,000 checks. And so he stopped, he did not sign that $600 stimulus check package, complaining about this foreign affairs spending. We did a calculation here that if we took all of our annual foreign affairs spending, somewhere $46 billion, and just set that to zero, and gave that to stimulus check increases instead, every person, instead of getting $600, would get $776 one time. So an extra $176. But then we'd have zero foreign affairs spending, which means the money we spend in Egypt that helps us typically use the Suez Canal, minus the hiccup we had here recently, doesn't happen anymore. And those things happen all around the world. What's your take on that? I mean, is really foreign affairs something we should even consider, or is that a small part of the bucket when we're talking about $1.9 to $2 trillion stimulus packages locally?
Oh, well, I think you answered the question yourself. It's $100 and something per person. It's not a huge amount of money. Now, when you say you're saying foreign aid, right? Is that what you mean?
Yes, foreign aid. Yes.
Foreign aid. Yeah, I mean, listen, foreign aid is its own topic, and it's a big topic, and there's many disagreements about in what ways should and shouldn't the U.S. be spending foreign aid. I think if you simply are making this a utilitarian question, a lot of that foreign aid comes back to the United States in the forms of contracts for American companies. Some people call that good. Some people call that cronyism. We could debate that, but I think that foreign aid is complicated because a lot of that money comes with strings. A lot of that money comes with countries doing things that are also good for the United States. So it really depends on your philosophy about foreign aid rather than the dollar amount.
On philosophy, I want to ask you two things here, and then we're coming to the end. So last year, people were able to apply for the PPP or mortgage forbearance essentially by raising their hand. All they had to do was say, please. And here you go. 12 months of mortgage forbearance. You don't have to make your payment. Add it to the back of your loan. When you refinance or sell, pay it off. You raise your hand. You want PPP? No problem. Here you go. Is that a problem? Does that create moral hazard, or does it matter? Is it just like, hey, everybody raise your hand, go get your free money, whether you need it or not, and hey, it's stimulus after all?
No, it is a problem. It is a problem, and I could have taken PPP money, EIDL loans. I chose not to. I know people in my field who did, and sure. I made a calculation, which was we had our biggest growth year ever in 2020 because people were stuck at home watching stuff. And we had an election, and it was a great year. And so I could have taken the money. I made the moral decision not to take it. There's no question that when Donald Trump did away with the oversight that was supposed to be in place to make sure it didn't become a slush fund for cronies and people who didn't really need it, that it was going to be a fiasco. And it was. So nobody should be surprised about that. Any kind of social insurance program will have some free riders and some people who don't really qualify who will get stuff. If the programs are properly administered, it doesn't really matter because the program does way more good than it does harm. Great, a few people got away with something. Sure. But if the oversight is appropriate, we say the overwhelming good overshadows that. When you eliminate the oversight, there's no question that exactly what was predicted is what happened. And, Steven Mnuchin and everybody else who was involved, they sort of made the decision either explicitly or implicitly by negligence to just say, well, we're just going to kind of look the other way.
Right. And I mean, that certainly incentivizes people to go, I may as well raise my hand, though, because everybody else is doing it. And then you find hedge funds getting the money and investing it into stocks. Which I want to leave on that. What are you? Do you even concern yourself with valuations, or is it just get my money invested and forget about it?
You're saying in terms of my personal philosophy?
Yeah.
I don't. For every year, you have people who say, look at the PE ratio, look at the all of these different measures. Peter Schiller has his own. I forget what it's called. CAPE.
The Schiller Index.
The Schiller Index. I don't pay too much attention to it, again, because my approach is when I'm picking individual stocks, which is 10 to 12, I've been public about which ones they are. I've been in Tesla since 2015, Netflix since 2015, Amazon, Alphabet. I bought in March at the dip of the pandemic, I bought Live Nation thinking eventually live events are going to come back. I bought Zoom. It's like I have 10 or 12 stocks. I'm not looking at fundamentals. I'm looking at what do I think the market play is. And then beyond that, it's just time in the market. Even when stocks go down, dividends remain steady. If dividends are steady but stocks are cheaper, my dividends buy me more. So I am not doing any kind of fundamental analysis like that. It's just the widest, cheapest possible fund and stay in the market as long as possible.
Are you selling any of your Tesla? You sell Bitcoin when it goes up. You selling Tesla?
I panic sold half my Tesla stock when Elon Musk tweeted a couple of years ago, I'm talking to the Saudis about going private, and the SEC said, what the hell are you talking about?
420?
I thought it was going disastrous, so I sold half of it. Obviously, it was a mistake, but it's fine. I put the half I sold into index funds. Everything's okay. Everything's okay.
You're fine. Yeah, that's awesome. Wow, what an amazing conversation here. Anything you want to leave off with, and how should people get in touch with you?
Well, listen, if you want to troll me, don't get in touch with me. I have enough of that to deal with already. But davidpakman.com, we're on Instagram, we're on YouTube. We don't have as many subscribers as you on YouTube, but I'm working on it.
Oh, no, you guys get crazy views, man. How many people do you have working for you?
We're a team. Right now, we're a team of 3, and we're going to 4 very soon.
Very impressive. Very impressive. All right. So David Pakman Show. Very nice. Great conversation. Really, really good. We'll have to do this again sometime. David, stand by. Thank you, everybody, for watching. If you found this helpful, consider subscribing, sharing the video. Check out the David Pakman Show, and we will see you in the next one.